Hey everyone, it's T with Millennial Bookkeeping and Advisory Services. Happy Super Bowl Sunday. Who are you betting on? The 49ers or the Chiefs? Well, in honor of Super Bowl Sunday, we have some pre-game Q&A for you. That's right, pre-game Q&A to the live sessions that will begin tomorrow, February 3rd, 2020 at 11 a.m. Central Standard Time, right here on your screen. That's on Instagram and Facebook. We'll be going live. Again, that's Monday, February 3rd, 2020 at 11 a.m. Central Standard Time. Okay, let's jump right into this Q&A. So I'm probably going to be looking off of the screen or away from the camera so that I can look at my computer screen or at my whiteboard behind me so that I could take a look at the answers that I prepared. So this question came from a business that is wondering how they can manage an old fleet of vehicles. So they're experiencing spikes in repairs, which the cash flow is not there to cover. They're experiencing low employee morale when the vehicles break down and the employees are transporting members. And they're also wondering they're also concerned with not having access to vendors in their area to outfit their vans to be wheelchair accessible. So I prepared the numbers for this organization, and let's take a look at the numbers and see what they tell us first before we jump into the individual issues, and then come to the conclusion on how to replace the old fleet or how to handle the spike in repair costs. So this organization expects to make about $200,000 from the operation of these vehicles specifically. So with expecting to make $200,000 in 2020 directly from the operations of these vehicles, they're also looking at a few cost items, and that's the cost of employees, the cost of repairs and maintenance, and this is without consideration, of course, to any new vehicles. This is only considering the vehicles that they currently have in their fleet. So repairs and maintenance costs, gas costs, violations costs, registration, insurance, and tolls. So with all of those costs and the annual expected sales from the operation of that fleet, they're already upside down. And they're going to be upside down by $208,000 for operating that fleet of vehicles. So what does that mean? That means, let's break it down to the unit, right? So their unit earnings, which is per hour, is $12. So they're earning $12 per hour to operate this fleet of vehicles, but it's costing them $25 per hour to operate this fleet of vehicles. So at $25 per hour cost and $12 per hour earnings, what does that leave us with? $13 in a deficit per hour to operate these fleet of vehicles. So we need to talk about how do we address this? What's the solution? What's the best solution for this organization? So it's also come to my attention that this organization has recently purchased 2 new vehicles at the price of $11,500 each. So that's $23,000 for 2 brand new vehicles on an operating lease. What does an operating lease mean? An operating lease in terms of a fleet means that it's basically an expense on the books. It's not listed as equity on the balance sheet, versus a equity lease or capital lease, which is listed on the balance sheet. There's salvage value to that, and of course you can depreciate a capital lease. So question number 1 in regards to old vehicles. What do we do about the spike in additional repair costs that's unplanned? So at this point, unless the organization is willing to take money out of the rest of the operating budget to cover these unexpected costs, then I would advise them to take out a line of credit if they are not going to do the other item that I suggest. And that item is, or that suggestion is, to purchase a new fleet of vehicles on an equity lease. And by doing that, they can take out a line of credit and use that line of credit for the down payment of the equity leased vehicles. And that down payment could be rather anywhere from $3,000 to $5,000, maybe more. But what it would do is it will replace all of the vehicles in their fleet, which there's currently 12 vehicles in their fleet. So it will replace all of those vehicles. It would not touch their cash flow. And then what it'll do is, let's say you pay $75,000 from a line of credit to purchase this new fleet of vehicles. At $75,000, you've already saved $25,000 in your normal repairs and maintenance budget for the year, because they anticipated paying $100,000 for the year in repairs and maintenance, according to, based off of what they've paid previously. So $75,000, you've already saved $25,000 right there. So now you have $125,000 from your anticipated sales for this particular portion of the business directly related to operating a fleet. So now you have $125,000. However, or unfortunately, they're still upside down because of the cost of employees. The cost of employees is $280,000 a year. So making $200,000 a year and paying employees $280,000 a year to operate this fleet of vehicles, you're going to continue to be upside down. So really, all that's doing is it's going to probably reduce the cost of just the repairs and maintenance. It's not going to reduce any other costs. So for me, what I would do is, this is the advice that I would give. This is the answer that I would give to this business. I would say take a look at if you're using the vehicles at full capacity. If you're not using the vehicles at full capacity, I would sell half of those vehicles, and I would maximize the use of the vehicles that remain in the fleet. So with 12 vehicles currently in the fleet, I would reduce it to 6, and I would use it at full capacity. And what that's going to require is a lot of management of time and resources to make sure that you're able to meet the demands of your members so that you can provide transportation services to them on time, every time, and you're not lacking in being able to provide that. Let's see. That's number 1. That's what I would do. I would take a look at if all 12 vehicles are being used at capacity. And if they're not being used at capacity, I would begin to sell them off. That right there is automatically going to reduce your cost to maintain that vehicle. Then I would take a look at the employees. So if you have 12 employees dedicated to, it's 14 employees, They have 14 employees, 2 of which are full-time drivers. Right there, that tells me that the fleet is not being fully used. And then you have 10 employees that are part-time drivers, and then 2 standbys, right? So the part-time employees, why? Let me ask you a question. Why are there 10 part-time employee drivers? Is there not a need for full-time drivers? Can these positions be converted to something else in the organization as opposed to being a designated driver on a part-time basis? Especially if the business does not require full use of, if the vehicles are not being used at full capacity and the organization does not require that. That's my answer to number one, and then also as a whole. Now, let's take part two, employee morale. So I can definitely understand how employee morale is being challenged here, in that employees are feeling embarrassed because the vehicles are breaking down and they have members in the vehicles that they need to transport, and they're on the side of the road waiting for roadside assistance or a tow truck or maybe even some relief to come and assist them so that they can get the members to the organization, so that they can provide the transportation services. Now, what I would say to that is that that's totally dependent on the company culture, and if the company has set forth processes. The thing is, so employees will not lose, employee morale will not be affected if there's a process, if people are confident in what their next steps are. If employees are not confident in what their next steps are, they're going to be confused, they're going to be frustrated, and of course they will be embarrassed because they're providing a service that people need, and they feel passionate about their jobs. And that's an awesome thing. Congratulations, you have great employees, because for your employee morale to be reduced because your vehicles are not working and they feel some kind of way about providing the service to the members, that's an awesome thing. That means that your employees care about the job that they're doing. You've overcome a huge obstacle by retaining talent that cares about the job that they're performing. So creating processes for situations like this will help to increase employee morale. It will empower them with the knowledge and ability to handle the situation. If they do not know how to handle the situation, then employee morale will continue to go down, because they don't know what to do. They don't know how to feel. And not just the technical stuff, meaning call the tow company or call the, whoever the liaison is at the organization that's going to help them, get this vehicle off the road and get these members to where they're supposed to be. But knowing how to deal with the members. What do you say to the members? How do you sue those members that's sitting on this van waiting to be transported and they're now broken down? How do you deal with that? How do you encourage these members that everything is going to be okay? You have everything in control, and maybe apologize about the situation and just let them know that they're going to get to their destination, and it may not be at the exact time that they need to get to their destination, but you're going to get them there as soon and as safe as possible. So that would be my response to how to deal with the reduction in employee morale because of the older vehicles and their breaking down. So then the next one is limited access to vendors that can soup up the van to be wheelchair accessible. In this case, I think we're talking about Google, and we're talking about bringing vendors or searching out vendors in a particular radius and either getting the vehicles to that vendor or getting that vendor to the vehicles so that they can be equipped so that they can be wheelchair accessible. Also, I would suggest, when purchasing vehicles, if you do not go with my first response, my first answer, then I would suggest going with medical transportation companies to purchase your vehicles. Those vehicles are already wheelchair accessible, And they're used vehicles. I know that used vehicles is part of the problem, that the fleet of vehicles that you currently have are old and they're breaking down. But I think that if you're looking for, you're going to have to choose one or the other, right? Because cash is a problem. With cash being a problem, you're either going to go out for a line of credit and you're going to purchase all brand new vehicles on a capital lease, or you're going to sell off half of the fleet, significantly reduce your repairs and maintenance, your overall vehicle cost, period, to operate that fleet. Or you can begin to replace your older vehicles with used vehicles that's not as old as the vehicles that you have, and that could very much so be equipped with wheelchair accessibility. And I would refer you to medical transportation companies that are getting rid of their fleet. Now, these medical transportation companies, like the bigger ones, they get rid of their fleet probably every 3 to 5 years. So you're not talking about a really old vehicle, a vehicle that's not working. It's salvageable, and the cost is tremendously less to you. I would also suggest checking out auctions where medical transportation companies sell their vehicles. Another thing would be that whatever fleet lease company you go with, they also purchase at auctions in bulk fleets of vehicles. And I would reach out to a few of these fleet leasing organizations and see if they anticipate purchasing a fleet of medical transportation vehicles that's already equipped with wheelchair accessibility. So again, let's recap this Q&A. So the question is how to handle an expiring fleet of vehicles, okay? And the considerations are the spike in cost and lack of cash when unplanned repairs come about, the reduction in employee morale when dealing with broken down vehicles and members are in the vehicles, and limited access to equip your vehicles with wheelchair accessibility. So, number one, the organization is already upside down, no matter which way you slice it. They are going to have to reduce their fleet or increase their sales, one of the two, in order to get right side up, because right now they're upside down. So that is a huge consideration factor, and I would definitely consider that as the most viable option. Get rid of a portion of that fleet. It's not bringing in enough money. Therefore, you need to optimize the fleet that you have. You need to optimize your time and reduce the fleet so that you can be at capacity at the fleet that you do retain. So if you cut that fleet down to half, so from 12 to 6, use those 6 vehicles to capacity, and I believe that you will still be able to provide the service that you are currently providing. And then the employee morale. Create the process so that the employees know what to do in this situation. Empowering people with the knowledge and ability to make decisions and to be informed will always make them feel more empowered in what it is that they are doing. You must equip people with information to make decisions and to stand on their feet, especially since there's not a manager standing over them telling them what to do, how to feel, or how to handle this situation. And I would definitely make sure that people skills is a factor in this process that's created. They need to deal with the members that may be also in distress trying to get to their program, and they're not able to get there on time and they're stuck on the side of the road. There needs to be some people skills built into that process. And then limited access to vendors. Once again, reduce that fleet. Check out medical transportation companies that's selling their vehicles. Reach out to the fleet leasing companies and find out if they anticipate purchasing a fleet of medical transportation vehicles that is already wheelchair accessible. I hope I've answered your question. If you have any questions about this question, or you have another question similar to this that affects your business, make sure you send it in to us at liveqa@millennialaccountants.com. Again, that's liveqa@millennialaccountants.com. I'm going to let you guys go now and watch that Super Bowl. Go Niners, go Chiefs, woo!